Hello, guys, and welcome to the show. Welcome to this Monday, March 18th, 2019. I'm glad to have you guys here. Now, let's get started. Let's open up the charts right here, and let's take a look at what's going on. First thing I want to talk about is, Canada is connected, the banking system in Canada is connected to the American banking system. Huge banks here in Canada, and banks are all over-leveraged worldwide, and they're all interconnected, to tell you the truth, but really tightly connected between the American banking system and the Canadian banking system. And so what we see here is we see that the over-leverage in the Canadian banking system, a lot has come from the real estate market here in Canada and their investment in the people. Basically, what I mean by that is the people, when the housing went up, during the years that the housing went up to astronomically high prices here in Canada, the banks extended loans to an awful lot of people based on the price of their homes. And now what we see happening is, well, let's take a look at this chart and I'll explain it to you. This is what's happened in 2008 with the American real estate. And as you can see here, that there was a drastic decline in real estate, single-family building permits, and single-family housing starts. You can see it dropped out, the bottom dropped out of it. But if we look at the top of this, where the bottom starts to drop, just the first 6 months of it, and don't look at the rest. Just kind of cover the rest up with your eyes and don't look at the rest. Just look at the first 6 months. Now, compared to this chart here, you can see that we're in the first 6 months to a year of this same sort of thing happening. The bottom falling out of the real estate industry here in Canada. And it's going to lead to something really horrible, a crisis in the banking system here in Canada, because there's going to be so many non-performing loans coming due from people who borrowed money in the good times based on the value of their homes, and now their home values dropping off a cliff. This year alone, home values here in Canada have dropped tremendously. Canadian home sales plummet in February, signaling a deeper malaise. Canadian home sales fell sharply in February. We're looking at a fall of home sales fell 9.1% in February. Canadian Real Estate Association said transactions slumped 12.6% in Toronto. Amazing. So what else we're looking at here? We got to move on to the charts here, and we got to talk about smart cell phone sales in China dropping off. Now this is an indicator. Shipments of smartphones to China dropped 19.9% since last year. To me, this is an indicator of the slowdown in the Chinese economy. And I think that's what we're looking at, about a 20% drop in everything across the board. They just can't afford to buy these phones anymore. So much for their consumer economy that they're trying to get going in China. So what's happening in the markets here today? We got to take a look at this, and so we're going to get the charts open right up here and take a look at what's going on in our markets. We're looking at $15.37 for silver today. It's up 11 cents on the day, and it's looking good, nice strong pattern today so far. And it's actually broke out of its range to the high side just a little bit, as you can see, maybe 5 cents to the high side right now from what it's been over the last few days, which is a good indicator. Let's take a look at gold today. Gold's up $2.50, and it's looking strong today too. Let me pull the chart up a little bit so you guys can see the prices. $13.04.80 for gold, and it's looking strong today. Let's hope it continues with this strength. But, I think it will. I think this is going to be a really good year for gold and silver. Really. I think it's going to be a strong year. I think it's going to close of the year is going to make people that hold gold and silver happy. Let's take a look now at Bitcoin. Bitcoin has been stumbling along, but it's been very slowly heating up, as you can see on this particular chart. This goes back a couple days. You can see that it's slowly heating up, albeit it's had a few drop-offs. It had a drop-off earlier this morning. But it's slow overall. The overall trend is it's slowly heating up again. It's getting up near $4,000. It's at $39.63 at Bitstamp this morning. And if we go over to Bitfinex, it's already broken through, and it's at $4,065. Now, if we take a look at the whole industry of the coins, what we can see here is $139 billion market cap and a Bitcoin dominance of 50.8%. We can see that a lot of these coins have been really in the green over the last 24 hours, but right now they're just marginally in the red. Ethereum's at $139.52. XRP's at 31 cents. Litecoin's at $60.34. And EOS is at $3.75. Now let's take a look at the Dow Jones this morning. We had an up day yesterday of 138.97, which I'll tell you, this market is so over leveraged right now. It's unbelievable. It's not going to open for 20 more minutes. Yesterday's 138-point gain. I'm expecting some small gains again today, probably, to tell you the truth. It's entered into the area of ridiculous, as far as I'm concerned. But this whole thing could really roll over bad, I'm going to tell you. Let me take a look now at crude oil. Crude oil is $58.67. It's been holding up on a rally that started back last December, but it's a very slow rally. It's almost like what's happening with Bitcoin. Bitcoin's slowly heating up. Well, so is oil. Oil's slowly heating up, and that's because this rally is being led by OPEC. They've slowly got the price up over a period of months from a low of $43.90 up to $58.55. So they've been really working hard at this, and they've been somewhat successful. Let's take a look now at bonds and rates. The bond yields are actually climbing today, but not much. But 1 basis point on the 5-year, and 1 basis point on the 10-year, and parts of a basis point on the U.S. 30-year. We're looking at a U.S. 30-year at 30.02, U.S. 10-year at 2.6. We're looking at a U.S. 5-year at 2.41. U.S. 2-year at 2.45. You know something's wrong here when the 5-year is selling for a with lower yields than the U.S. 2-year and the U.S. 5 and the U.S. 3-month. The U.S. 3-year and the 3-month and the 2-year are almost identical, 2.45%. It's the yield curve is inverted on the short end of the yield curve. It's inverted. There's an inversion there. But that indicates that they're buying treasuries with a short-term outlook, meaning that they're very nervous about the economy. Now let's take a look at the U.S. dollar index today. What we see is the dollar's just been stumbling along lately in the mid-96s. This is still a strong dollar. You've got a strong dollar, and the dollar's been holding up amidst a lot of pressure. It's all about what the Fed's been doing. They've been supporting the dollar with quantitative tightening, and also the fact that they've been raising interest rates. It says my page is unresponsive. I'll tell it to wait, because I don't want to leave this page because I'm talking right now, Anyway, if the Fed stops their support of the dollar has been undermined. It's been undermined something viciously by China and Russia and other countries who... the reason why the dollar has its legs of support in the first place is called the petrodollar. They use it to sell oil. And that's been slowly diminishing over the years. And so there goes my page again. Okay, listen. Thank you guys for listening to this market report. And remember my other channel, Delta Report. Over there, I do Bitcoin. It's all about Bitcoin and the cryptocurrencies over there. So thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.